We're back. Take a look at shares of Dick's Sporting Goods today. They're under some big-time pressure. They reported weak revenue and comp sales. Stock's down 3.5%, Pete.
And that's what everybody always looks at. They love what the earnings are, but they also want to see what those revenues look like too, to balance it out. And the fact that they missed there, Scott, I think that hurt them in the same-store sales or the comp store sales, that being down. That's why it's being punished today. Very inexpensive stock. I think it stays inexpensive. Foot Locker's a better play right now.
What do you think about what they said about Under Armour?
In terms of the amount of inventories and all that?
Yeah, and how it's
Under Armour's down today.
Sorry?
Under Armour's down today.
Yeah, based upon those.
And I use TJX as a measuring stick on that as well, because I see a lot of Under Armour in there right now.
Is that where you want to see it?
Well, no.
Exactly.
Yeah.
Weiss, what do you make of this Yum China report? Came out yesterday.
Yeah, look, I know Hill House. They are a real firm. They've been in that area of the world for a long time. Supposedly, Yum China turned down an offer $46, not confirmed by either party. Look, I think where there's smoke, there's fire in this one, and it makes sense. Private equity is really accelerating their activity in that part of the world.
All right, Box having its worst day in nearly 6 months. They cut their revenue guidance, Josh.
Dude, you know how hard you have to look for a technology stock with a chart this terrible? Like, you have to really sort through like 1,000 stocks to find anything in software that's not working. This isn't working, and Dropbox isn't working either, by the way. I already gave you the name in this group, ServiceNow. Pull that chart up instead.
You were in
Massive
Dropbox,
breakout for like 10 minutes.
I'm just saying, you're
10
in
minutes.
it.
Yeah, I took a break even on it soon after the Box IPO. But listen, let me get back to what I was saying. There are companies. There are companies.
Don't let my memory go. Don't let my memory get in the way of your report.
Hey, don't let Scott interrupt you again. Go ahead.
It was 6 months ago.
I'm just saying, I knew you were in the name.
Right,
That's why I brought it up.
You have a great
My memory goes back longer than
All
that.
right, what does he win? Okay.
What's behind curtain
Is that what we're doing now?
I'm just
Is that
saying.
what's hot right now? Memory?
I was just pointing out that you were in Dropbox.
Anyway, focus on cloud stocks
bringing the truth to the peeps.
that provide a value-added service to businesses. That is the most red-hot space right now within software, and things that are just storage and quite frankly a little bit commoditized are not hot, and I think price action makes that very apparent.
Anybody else want to test me?
No.
All right, HP
You're on a roll,
Enterprise is rising after beating on the top and the bottom lines, raising their full-year guidance stock. It's yours.
Yep, that's the trifecta. Beat on both metrics and raised. Antonio Neri, the CEO and president here, said effects from China, any negotiations that are going on here, not likely to affect them negatively going forward. Obviously, business picked up pretty substantially, so like the way that the stock reacted. Obviously, Bernstein had a tough call last week when they downgraded them.
All right. CenturyLink is up 22% in the past month. It's one of your top holdings, Jenny.
CenturyLink has 450,000 miles of fiber, and I think that as the 5G rollout happens, they're a direct beneficiary of that. It's hugely valuable as an asset. It's hugely valuable as a revenue source. And last week there was an analyst report out, 45 pages that largely focused on concerns over revenues, and about a quarter of a page focusing on the fact that it has a 9.5% dividend yield that's safe and supported by management. I think there's huge value to that revenue stream that's unappreciated.
Okay.